and welcome to all of you. So maybe some of you already know Thomas Moser, but first of all, I would like to give you a little bit of background of Thomas Moser. I'm sure he will tell you a little bit more about himself. Again, welcome to everyone. This is our third edition of our EBC Talks. I'll also tell you a little bit more about who we are behind EBC Talks, who we are behind the European Blockchain Convention. But first of all, thank you very much to Thomas Moser for joining us today. Thomas Moser is alternate member of the governing board at Swiss National Bank. Welcome, Thomas. How are you today?
I'm fine. Thank you, Victoria.
Good to hear. So before joining the Swiss National Bank, I think it was 11 years ago, right, Thomas? You worked, you worked at the IMF as executive director. And the last few years, you've been very much into central bank digital currencies, blockchain, the whole blockchain space. And we also know that you're going to publish in a few days, hopefully, a paper on central bank digital currencies that you've been working on for a long time. So we are very much looking forward to read that paper. So today's EBC talk, as you know, is going to be about central bank digital currencies. It's a very, very hot topic lately for several reasons. As you may know, in October, the European Central Bank issued their report on a digital euro. So basically talking about how potentially they could issue a central bank digital currency, the implications, both legal, technical, and so on. So that was an important step. We've also seen, for example, the Central Bank of China being very active in the space. Also, a tiny country as Bahamas been very active, and well, I guess we've not just seen like central banks being active in the space. Also, when it comes to digital money and digital gold, when we saw in August that MicroStrategy, a listed company, decided to invest into Bitcoin, that was also an interesting step in this whole space. Then we saw that Square, also founded by Twitter's founder Jack Dorsey, got into Bitcoin. Then Marathon Patent Group, then Tesla lately. So today's topic is on central bank digital currency. We will talk a little bit about Bitcoin at the end, but it is on central bank digital currencies. And what else did I want to say? Well, yeah, again, welcome to Thomas Moser. He's our very, very special guest today. Before starting actually with the EBC Talks, I would like to say a few words about myself and Daniel Salmeron. Yes, we are the hosts today. So we got to know each other, just a little bit of background, I think 5 years ago, 6 maybe. We were working in an investment group here in Barcelona where we are based. Daniel was a fixed income analyst, and I was working as an investment analyst in a private equity fund. And somehow we got into blockchain, the whole blockchain space. And then 4 years ago, we decided to launch the European Blockchain Convention. And that's also that's when we actually got to know Thomas, because he was one of our first confirmed speakers for our first edition. Maybe we can go to the next slide, Daniel. So, yeah, our first edition was in 2018 in Barcelona. Thomas was with us there. And he was also with us in our second edition in 2019 in Copenhagen. And then in 2020, in January last year, we actually managed to do a big conference before the whole coronavirus crisis. Thomas could not make it because he had a board meeting, but then he joined again in September, so that was great. And we are actually now also working on our 5th edition, which will take place in April. So what we do in the European Blockchain Convention is to provide high-level content. We basically see our events as courses into the blockchain space. So we know from people that they are learning like a lot, but not just, I mean, we're not just providing high-level content. Also, very, very good networking opportunities, because at the end of the day, we want you to learn, we want you to connect. So this is our goal. And what do we have on the next slide? Yeah, this is our next edition. The idea is to reach 2,000 attendees. I don't know if we've been too ambitious. We were 1,500 in our last edition in September, 100 speakers. One of them is Thomas Moser. We will have around 30 panels and workshops, 5 days in April from the 12th to the 16th, sorry. Yeah, this is a bit our reach in terms of attendees. And yeah, some of our confirmed speakers, we have Petteris from the European Commission, David from Vodafone, Nena from the Ministry of Economic Development at Slovenia, Odile from Renault. What else do we have? We have Pramita from Ford Motors, Marta from Forrester, Dale from FedEx, Moritz from Deutsche Bank. We have Raimundo from Prosegur Crypto, one of the largest security companies in the world, Marty from Rakuten Blockchain Labs, Jan, European Commission, Kim from Rabobank. Yeah, and we can continue from what was before Libre Association, Shell, Hyperledger, Bosch, Settlement, the Spanish Stock Exchange. And yeah, well, as you can see, many, many great companies, projects, and public institutions. So yeah, and then a bit about our tracks. We'll have a finance and digital assets track, a health and farmer track, a track on what is Web3, decentralized web and data economy, supply chain and mobility, digital identity and public services, blockchain platforms and architecture, so like a more techie panel, and social impact. Good. Yeah, so, oh yeah, and a little bit about the EBC Talks. So we decided to launch the EBC Talks in December to basically have good content throughout the year, so you don't need to wait until we have a big conference. So this is what we have today, our third edition. We had our first one with the European Commission in December. In January, we had with the team of blockchain at Renault, and today with Thomas Moser. Good. Oh yeah, and if you want to do any posts online, please use the hashtag EBC Talks. And feel free to ask any questions through the chat we have in the Zoom meeting or YouTube and on Twitter. Yeah, that should be via post, I guess. Yeah, so again, thank you very much everybody who's joining us, who's part of this EBC Talks today, and a special thanks to Thomas. So Thomas, welcome. And before starting, would you like to say a few words about yourself? And then we can go ahead with the prepared questions we have for you.
Yes, thank you very much, Victoria. So thank you very much for having me. You must get tired of me because I'm so often in your events, but I'm really happy to be here. And as you said, you reached out to me early on. I think because I happened to be one of the central bankers relatively early on talking about these issues. I got interested in Bitcoin specifically around 2013. And the funny thing back then was I could say almost what I wanted about the issue. No one really cared in the central bank community. And suddenly then central bank digital currencies became a big issue in 2018, I would say 17, 18. And then it also became a crowded field. A lot of central bankers are now in this area. A lot of central banks are studying the issue. So it's continuing to be very interesting. And when you asked me to join you in Barcelona in 2018, I mean, two enthusiastic organizers, the topic and going to Barcelona, it's almost a no-brainer. Of course, you have to say yes to that. So I'm very happy I did that. And as you said, I'm at the Swiss National Bank. I'm an alternate member of the governing board and almost 11 years now in this position. That's about me. Let's start.
Fantastic. Thank you so much. Thank you so much for joining us again, Thomas. I know we're not getting tired of you, indeed. I think you have too much to share, too much knowledge to share with us. So it's yeah, we're very grateful to have you again. Okay, so I think, I mean, maybe for the audience, as always, we know we have an audience that's very mixed. So some are very, very new to blockchain, to central bank digital currencies. Some have maybe a bit of experience and some are a bit more experienced. So to kind of like have everybody with us, I think it would be good if you could kind of explain what a central bank digital currency is and the difference between a retail and a wholesale central bank digital currency.
So I think this is an important issue because a lot of times you read about the stable coins and central bank digital currencies, and you get a mix up there. I think what's important is a central bank digital currency is a liability of the central bank, just like your fiat currency, which basically means that you do not have a counterparty risk involved. A central bank can always fulfill its obligation in its own currency, so you don't have this layer of counterparty risk involved. So it has to be a central bank currency, it has to be a liability of the central bank. And then you, as you said, we make this differentiation especially in the literature on central bank digital currencies between wholesale Cbdc and retail Cbdc. And the difference really is that it's like it comes from the payments literature. So wholesale payments are payments between financial institutions. They bundle all the retail payments in there, and these are large payments. So a wholesale Cbdc would be a Cbdc that is only available to financial institutions for the payments that they have among each other. And the retail Cbdc would be something that customers, households could use, like you use banknotes and coins today.
Fantastic. Households. Yeah, sorry. Fantastic. So just wrapping up. So the wholesale CBDCs are for financial institutions, large payments. And when we talk about retail CBDCs, it's for you and me, for households, to do the smaller payments.
Correct.
Fantastic.
And the difference is important because central banks are less worried about introducing a wholesale Cbdc. And that's mainly because the financial institutions already today have access to digital central bank money in the form of bank accounts. So the financial institutions have an account with the central bank, and that's how they make their payments over these accounts. People like you and I, we don't have an account at the central bank. We have to go through the commercial banks, and therefore the thinking in the central bank community is that the disruption would be much larger if you introduce a retail Cbdc than when you introduce a wholesale Cbdc. And I think that's why a lot of central banks are very cautious with the idea of introducing a retail Cbdc.
Yeah. Yeah. So basically what we're seeing is that, I guess we'll come to that later, but that a lot of commercial banks are also quite scared about the introduction of a retail CBDC.
Correct. I mean, that's the big danger for them is, of course, that they are getting disintermediated, not that they are not needed anymore, or at least that they are losing the funding from the deposits, which would drastically alter the business model of some of the banks.
Yeah. Yeah. Well, I know you have a solution still to kind of collaborate with the commercial banks if you got to issue a central bank digital currency, a retail. Okay, great. So let's go to next question, which is related to what we just spoke about. Talking about retail central bank digital currencies, what would happen if we moved deposits from the households to the balance sheet of a central bank? How would this impact the commercial banks?
Yeah, I mean that's exactly what the fear is. I mean, it depends also a little bit on how quickly that would happen. But basically, when people do not hold deposits anymore at the commercial banks, but they hold them instead at the central bank, then the commercial banks lose an important funding source, which is a relatively cheap source of funding for them. If they lose that, then they would have to, they have basically different ways to react to that. One would be that they just give less loans or make loans more expensive, especially when they have to finance themselves again through channels that are much more expensive than deposits. So it's not really clear what would happen to the lending channel of a bank. It's also not clear whether whether the business model of a bank taking deposits and then lending it out, if they really could survive. So it's not so clear what would happen, the impact that would have to the economy. So I mean, you can have different models. You can say, you know, after a certain amount of adjustment, we would be just as well off as we are today. The problem in here is that we are also a little bit worried about this adjustment. You know, even if you say we go from A to B, and you say B is no problem, maybe going from A to B is a problem. So you can have a lot of instability on the way going there. And then the other risk, if that happens very rapidly, if these deposits are liquidated very quickly and moved to the central bank, you have something that is equivalent to a bank run. So you can have really some instability issues, and I think that's the big worry that central banks have. Now you find a lot of people who say, you know, that's not really a problem. Some people say basically the central banks then just get all the deposits, and they just have to reallocate it to the economy. I mean, one concern here would be, is it really, you know, do you think that the central bank does a very good job in reallocating then again resources to give loans and credits? So that you can question. And other but other people say, you know, no, that maybe the banks will then just make their own business model much more safe, so that the whole system would become more stable. So I think if you look at the discussions, it's just not clear what happened. So there's a lot of uncertainty there.
But now that it's not clear at all, why do you then think that Christine Lagarde said recently that potentially we could have a digital euro in 4 years' time? I mean, will it be so fast? Will we be so fast?
So, and I think that's then the important issue. It really depends on design. I mean, the way you design it, you can have a design or an architecture where you include the banks. So I think also that's when you look at what central banks said, and especially the research papers coming out over the last year, most of them were about design. How does the design or the architecture have to look like? So I think that's exactly now the goal, to have an architecture or a design that excludes all these risks and problems. So it is possible, but it depends on the design.
But who do you think can come up with the best design? I mean, who is it? Like working together, the 27 member states of Europe with Switzerland, Norway, and Liechtenstein? I mean, how do we do that? Come up with a.
That's, I think most central banks are a little bit in a waiting mode. You know, they are watching. I mean, a lot of studies coming out, but I think everyone is a little bit watching, like and asking or waiting for others to go first, and then observing how well it works. But I could also imagine that there are very different designs across countries. You know, countries have, even if you look at some of the financial market infrastructure, I mean, there are similarities, but there are also differences. The US financial market works different than the European financial markets to some extent. You know, banks play a much larger role in the European system than they do in the US system, where markets play a bigger role. So I could also imagine that the designs for CBDCs will look different according to the country.
Thank you, Thomas. I will now give the word to Daniel.
Hi, Thomas. I'm curious as to, like, how will a digital euro issued obviously for the European Central Bank impact the future of money? How do you envision a digital euro? Like, for example, would a digital euro coexist with cash, for example?
I mean, these are very good questions. So I think, again, it will depend on design. So if cash would provide a service that the digital euro does not, that might be, you know, there might be use cases for cash. And I mean, one obvious use case here is privacy, confidentiality, privacy. You can, you know, then it depends how the digital euro is designed. If you provide some sort of transaction privacy, then you might see cash going out. If not, you might have some use cases for cash, but it's very difficult to say that in general, but it's one of the interesting things to see.
Yeah, you brought up also an interesting topic, right? Data privacy, because in my point of view, one of the most interesting applications of blockchain when it comes to money is the programmability feature. Like, for example, that the government or a central bank can program money to make some things when we have some scenarios. I think that's a powerful feature, but that means a lot of things also in the political aspect, right, of money. How do we make sure that data privacy is maintained?
No, I think that's a very, very good issue. And actually, in the paper that Victoria mentioned, and I have been mentioning it since a year, waiting for it to be through all the review processes and being released. That's exactly an issue that we are tackling in there. And I wrote this paper together with Christian Grothoff from the University of Bern and David Chaum. And David Chaum you could call him the father or grandfather of cryptocurrencies, because he came out with the digital currencies in the 80s. So extremely early. And one of his big concerns was exactly privacy. He said, if we move into a world now of computers and where you leave your traces all over the place, how do you make sure that you protect your privacy? And what he came up with is an invention called blind signatures, where you can actually make signatures, but the person who signs it does not see what it is. And he did incorporate that into his digital cash system in the 80s. And we now incorporate that in our CBDC proposal. So in our proposal, you would have exactly this transaction privacy. If you look at the Bank of International Settlement, the BIS, the general manager, Augustin Carstens, just gave a speech at the end of January. And very interestingly to me, he really talks about this privacy issue. And he says, it's an issue. The central banks do not want to have this data. And that's also what I agree with. I do not want to have this transaction data. It gives you an avenue to put pressure on central banks. And he says, that the private sector should solve that. They should have the data. But I also think this is not necessarily the best solution, because there can also be pressure on the side with Apple, Microsoft, and so on. So the best thing you can do is not to have the data at all. And I think with blind signatures, you can exactly achieve that. There are other on the blockchain, you have other, zero knowledge proofs, you have zero cash. But then again, the difficulty is how do you combine the regulatory requirements for anti-money laundering, terrorism fighting, and this privacy? That's in the architecture the difficult issue to solve.
Yeah, like in every technology advancement, then you can use it for the good or for the bad, right?
Correct. Yeah.
Okay, Victoria.
Yeah, no, just sorry.
You can use it for the good or for the bad, right?
Correct.
Sorry, I just opened the wrong tab. No, Thomas, I just wanted to ask you, so maybe if you could try to explain to the audience how this blind signature, how does it work, like in an easy manner? How would it work?
So the way we would do it, so the architecture we have is relatively conservative. We would go through the existing banking system, and it's really modeled just like nowadays you get cash from your bank through your account. You would do the same thing with our CBDC. You go to the bank and you get CBDC. But when you get your CBDC, you blind it. But that basically
we lost you a few seconds. So you said it's like going to the bank and get a 10 euro note.
Exactly. It's like going to the ATM and getting your cash. But when you have that, when you send that request to your commercial bank to get CBDC, then you would blind it. So basically the CBDC is like a serial number. And there is you basically do some calculations that this number gets all scrambled up. So no one can track it back to the original serial numbers. In that sense, it's blinded. And you send that to your bank. The bank sends it to the central bank. The central bank signs it. So like you have on your banknote, you have the signature of the president of the central bank. So it's a valid coin. but neither the central bank nor the commercial bank see the original serial number, so it's blinded for them. And then you get that, and then you unblind it. So no one has seen that you got this serial number. So that's basically how it works.
So I could basically, yeah, still go and buy, I don't know, if I want to buy 2 packets of cigarettes without anyone knowing it. Correct. That would be.
And then the merchant who sells you the cigarette, he gets the coin with the serial number, but no one can link that serial number to you, because no one has seen you get that serial number from the bank.
Mm-hmm. But then when we think of the commercial banks, I mean, I can understand that the central banks don't need to have that information, but this data, I mean, obviously if I take out 10 years out of the ATM, it's different. But if I use my credit card or my debit card, they want to have this information, right? I mean,
exactly. They want it because that's an account-based system. You know, I mean, there are basically these 2 ways to pay. So put it simply, so either you have an account-based system where you basically just shift money from one account to the other account. But to do that, you need identities. You know, you need to know who is the person who owns that account, who is the person who, because you basically transfer it. So credit card system, debit card system, they all require identification, because you have to know from who do you take it, to whom do you send it. Then there is the token-based system, the cash system, banknote system. If you take a banknote, if you pay me for something, I don't need to know who you are. You know, I don't care who you are. You don't have to care who I am. We just exchange the things. Mm-hmm. The only thing I care about is the banknote real or not? So the value itself is in the token. It's not based in the bank accounts. And here I'm going now to say something that sometimes irritates people. But if you think about the blockchain is an account-based system. You have identities, even though there are pseudonymous, but you have key addresses in there. It's not a token-based system. It's an account-based system. The only difference is that the accounts are not centrally held. They are distributed. You know, it's over the entire network. But you have accounts there. And our proposal is a token-based system like cash, where you do not have any accounts.
Mm-hmm. Interesting. Thank you, Thomas. I just saw a question from Fritz. Fritz, do you want to ask the question yourself? So Fritz, he's a professor at Copenhagen Business School. I think it was almost 3 years ago I did a blockchain summer school at Copenhagen Business School. So I had the honor of having him as a teacher. So maybe Fritz, go ahead with your question.
So yeah, thanks, Victoria. Actually, I'm at the University of Copenhagen at the Department of Science.
Sorry.
And we did this actually. Yeah. Well, but I'm very honored that you think of me as a business savvy person. So, or whatever. So hi, Thomas. Sorry, I just had a question about the Cbdc. There's a number of analyses people have been doing about the potential shock it could have of introducing retail CBDC, and and proposed mitigation by actually slowing it down and getting to a steady state that already exists. So, for example, publicly owned postal bank system in Japan, for example, basically has an unlimited guarantee, and it's not allowed to go bankrupt. Mm-hmm. So it's basically as an account-based system already working as a retail CBDC. Well, not CBDC, but government-based system. But for the user, actually, it's basically secure money. So why is there such a concern about a retail CBDC if there is both theoretical and practical evidence that the kind of one-time shock effect that of people potentially moving a lot of funds could be alleviated? So you can slow it down, just like you can only get $50 in Greece, every day. That was one way of avoiding Greece going bankrupt back then, because it was sufficiently slowed down. Something like this. I don't know. So the question is like, why is there so much talk about bank run scenario?
I mean, you're absolutely right. There are a lot of proposals out there how you could actually mitigate that. And as you said, I mean, postal services, there are in several countries you have that. What usually happens there is that the services are not, at least when I think about our country, not that great. You get a much better service That's the commercial banks. That's why not everyone goes to the postal system. Like the online banking is better, the services you get better, they are bundled with other things. I mean, you can say now, well, that's exactly what banks would do. They would just provide better services to the customer because they have to compete now with the CBDC, and it forces them to give a much better service to the customers for them to stay. Some people are saying that, and that's absolutely possible that that happens. I think it's just that, that's also why I said central banks are really watching, and wouldn't mind someone else to go first and see what exactly happens. It's just the uncertainty, you might be right, nothing happens. You can do, you could have several mitigating, you could put limits on how much you take. There is the proposal from Ulrich Binzeil at the ECB that you have a different interest rate. I mean, right now everything is zero, but basically that you have just a zero or even a negative interest rate on CBDC, so that commercial bank deposits are more attractive. I think that these are all proposals that the central banks are looking into now. But just the possibility of introducing something and then causing a financial crisis or financial instability, I think that's what worries the central bank. Also because, again, the situation is very different from country to country, but one argument that I hear often, even, at the Swiss National Bank itself, is like, why do we need a CBDC? We have private sector who provides these payment services. Everyone is happy. We have banknotes for cash. So why would we need a CBDC? The question then is, of course, like in countries like Sweden, where the cash is disappearing, do you want to have the state any role again in the payment system and in the giving people the possibility to pay with state money or not? So these are all the questions. But I totally agree with you. It's not really clear what will happen, but I think that's exactly what worries the central banks.
Just quick follow-up. I think what he said, I think we don't have secure money, digital money. You only secure cash, and that one can burn and get lost, whatever. And that's, I think, what people are interested in. There's a lot of scenarios where it's not just, if you talk about wholesale, so okay, pension funds can get that, but there's somebody who buys a house, and has to pay 400,000 euros, and then you might just pay it into an account in Lehman Brothers, the night before. So they think of it as like, it's money, but they're actually giving a loan to somebody, okay? And I think that is not clear to many people, and that's the reason they believe it's okay as it is. If you make clear that you have a postal bank system, which is like, one big digital safe, nothing happens to your money, it's secured, you don't get interest, maybe you even get a charge. In Germany, I heard you can't give negative interest, you have to call it a charge or something like this. To keeping your money safe, but it will be there, okay? I think that, if you look in the bond scenario, investors, they usually make contracts to make sure that if they get a payment of $2 million or something like this, they can swap it right away to something else on the same day, because they don't want to keep it in a bank account for a day because they're worried it's going to be gone tomorrow. So I think it would be very useful to have just a depository, a secure depository for cash. I mean, cash in the sense of the equivalent of, the banknotes and coins you talked about.
Yeah, I mean, that's exactly what I said in the beginning. What makes a CBDC, it's you don't have this counterparty risk that you have if you use private money.
Thank you. Yes. So yeah, thank you.
Thank you.
I think it's much more fun when we have questions from the audience, right? So it can be like a Clubhouse, Zoom meeting, something like that. I see a good question here from my professor at university, Aurelio. Hi, thank you for joining us today. Do you want to ask yourself the question? Welcome, Aurelio.
Okay, thank you. Can you hear me?
Yes.
Yes. So, yes, I'm an associate professor at the university here in Spain, and I've been studying cryptocurrencies from the last, let's say, 4 years or so. Regarding central bank digital currencies, what would be the effect on the monetary multiplier? Because if each currency has a serial number, let's say, So then you preclude the secondary creation of money in banks. So because otherwise the banks should create or should keep new numbers. So that's something that I'm not sure which effect could have on precisely on controlling the quantity of money in the economy.
So I'm afraid to say, I have to say again, it depends on design a lot. So if you design it like cash, the system that I talked about, which is really an equivalent of digital cash, then basically I think the effect would be the central banks, the commercial banks would just have to have a reserve of CB, depending again on design, but basically it would be for them like cash. They just have to be aware that the customer could come and exchange the claim they have on the deposit into cash or into CBDC. So their liquidity management, in a sense, would be affected. And of course, that would then affect the money multiplier. So that's one thing. Probably I could imagine that the circulation of CBDCs might be much higher than the circulation of cash. So there you have also an effect on how much liquidity you have to hold. So these are some of the adjustments. Of course, if you do something else, if it's really something different than just the equivalent of cash, then depending on what it is, you might have very different effects. And what Daniel talked about before, if you start programming, I mean, that's the fancy stuff then. If you start programming the money, that it can do all kinds of different things, I think we're in total uncharted territory. That's also, I guess, one of the worries. We will have to figure out what happens. Even if you think of small changes, in Switzerland, so most central banks nowadays use real-time gross settlement systems, RTGS systems, and they were introduced in the 80s. And I think central banks were really caught by surprise when they introduced these systems, how that affected the liquidity demand of the commercial banks. I remember in Switzerland, it was totally underestimated the effect that would have on the liquidity demand of the banks. And in that sense, that even though liquidity management doesn't sound like a big thing, but as you say, it can really have an effect. And you will have to see how that then plays out in the entire transmission channel. These are very interesting topics. And I mean, if we add the programmability in it, then I guess we are there where we can imagine a lot of different things. Thank you.
Thank you, Thomas. And thank you, Aurelio, for the question. So I've seen a question as well from Dora Chan. So I did my master's in financial management at Sheffield Hallam University, and Dora Chan was one of my professors. Dora, do you want to go ahead with your question?
Oops. Hi, everybody.
Hello, Dora.
Hello.
So let me show my identity.
Oh, yeah. Great.
So
and
hi,
Happy
everyone.
New Year.
Happy New Year, everyone. Hope you have a much better year in the year of the ox.
Thank you.
So welcome. Thank you, Victoria, for inviting me and the staff and students from Sheffield Hallam University from the UK. So in front of the experts, I am very humbled because I am not expert in banking and finance. Just from a little housewife's perspective, I would like to ask the following questions. What is the main purpose of the CBDC? It is to replace the paper currencies or to basically to erupt the whole system, to just change the historical system and let the central bank to run the system? Because central bank seem to me the regulator, the one have the helicopter view about the whole infrastructure of the banking system. now it seems to me is the central bank become the major player to compete with the commercial banks. So my first question is, what is the key purpose of the whole movement of CBDC, and how it is to be fair about such a big organization competing with the commercial banks?
I mean, that's thank you very much. That's, I guess, exactly the question. You know, we talked a little bit about that also with Fritz. So why would we need a CBDC? I mean, as I said, if you ask my governor, he would say, no, we don't need a CBDC. We have the commercial banks who do a perfectly well job, and we have cash, and that's all there is needed. But I think one reason is, for instance, in some countries like in Sweden, you know, they have the problem that cash is disappearing. So people are not paying with cash anymore. Everybody pays with digital money, and that's provided, as you said, by the commercial banks. Now you can say that's okay, but one of the problems that Fritz mentioned is you have a counterparty risk in there. So if you use money from a commercial bank, that commercial bank can go bankrupt and you can lose all your deposits. That cannot happen with central bank money. So one argument for CBDC could be you want to give the people a type of money that does not have counterparty risks involved. That could be a mission that you have. It might be an important one. Usually if you have a wholesale payment, you know, you say you want the banks to settle their payments in central bank money exactly for that reason. You do not want to, you want to have as small of a risk in there involved as possible. So that, I think, would be an argument. And the other is just the question then, you know, I guess if you have a lot of competition among the commercial banks that makes sure that the customers get a good service, that might be totally acceptable. But you may have also situations where you have where you do not have a lot of competition, where you might even have a monopoly of a commercial bank, and then central bank money could provide this competitive force that gives people a choice. And I would say, you know, but worried central banks a little bit was also this announcement of Facebook with Libra, which is now Diem. But the worry a bit that this could just become a worldwide monopoly for a payment system, and you have to somehow make sure that there is enough competition that customers get a good service. So that would be my answer. But as you said, that's also one thing that central banks are worried about. They do not want to create competition with the commercial banks and then have the commercial banks disappear. I think there is a good room for both types of money. Usually the private sector is much better with innovation, with providing good services, and the state sector is usually better with stability and security, and you need kind of both.
But how can you ensure the central bank will not become the one who monopolize the industry?
I think
because
the private sector is just too good at innovating. You know, if you actually, if you go into history, I think it's very interesting to see banknotes. You know, they originated in the private sector, and there were a lot of banks who just issued banknotes, and then the government started to regulate banknote issuance. And in the end, it was monopolized. It was taken away from but then the banks started to innovate again with deposits and different types of payments. So I think there's always innovation again that finds new ways how to provide services in this area. And there will always be a competitive alternative to central bank money. That's at least my thinking.
Okay, thank you. Can I ask one more question, please? Instead of seeing it as a demarcation between the central bank and commercial banks, is there any proposal to actually have a collaboration between the central bank and the commercial bank to make it almost like a hybrid approach?
Yeah, I think that's kind of that was kind of the equilibrium that we had, and now, you know, everything with digital money starts to play out again. but I think that's exactly what we had. So basically the commercial banks, they did hold central bank money as a reserve, and they provided then or created money for their customers. And I think that's the system that we had over the last, maybe 40, 50 years that worked relatively well. And now I think what the new thing is now that we have these private non-banks appearing and providing money. That started already, decades ago with money market funds in the US, where basically you have something that looks like money that you can pay with. But now with the cryptocurrencies, you have total new players who come and issue some form of money. So I think the interesting thing is now it's not just the central banks that are disrupting this equilibrium, but it's really new players, non-bank players who are appearing right now.
Yeah, thank you.
Thank you.
Thank you, Thomas, and thank you, Dora, for the questions. So I also saw a question, there is several questions, obviously, but one from Mariana Bellotti. If I remember correctly, Mariana, you work at Caisse de Ports. Yes, my French is not good.
It's perfect. It's perfect.
Mariana,
so
go ahead.
Yes, I work as a CIF, that is industrial PhD student at Caisse de Dépôt, a French financial institution. So my question is about the programmability of money. So the fact that once we introduce this type of currency, we actually, as we introduce the programmability, I think we lose a bit on freedom how to dispose of money. So my question is about the new liquidity requirement and the impact on the monetary policy execution. Because let's take, for instance, settlements operation. Now we have the freedom to move some liquidity before a settlement. And once we introduce programmability, so smart contract, we will need to lock our money for a set amount of time before the settlement takes place. So that's my question.
No, I think that's a very good point, because as I said before, this liquidity issue is important and often it's underestimated. And as you said, I mean, an interesting thing is if you lock up liquidity in smart contracts, then apparently the entire system needs much more liquidity. So that's, I think, an interesting issue. The other thing is also what I think is interesting is that you have, especially if you have decentralization, it goes a little bit into the same direction. I mean, one big advantage of a centralized system is exactly liquidity. You get a lot of liquidity, like in an exchange. That's why, for instance, a lot of people buy their stuff through Coinbase, because it's a very liquid market. It's liquid because it's centralized. A central bank is basically a centralized reserve pool. So when you decentralize, the difficulty is, as you say, to get the liquidity, because you lock liquidity up at different places, you distribute the liquidity. So I think some of the very interesting developments now in decentralized finance are exactly these questions. How do you get, for instance, a decentralized exchange with enough liquidity? I think it's fascinating, but it's a very difficult topic.
Thanks a lot.
Would be a good PhD topic.
Thank you, Mariana, for your question, and thank you, Thomas. So let's continue with our EBC talks. We have had a lot of good questions from the audience, and still many questions. But now I would like to take the word. So Thomas, I know at our last European Blockchain Convention, you talked about your wholesale Cbdc. You were running a proof of concept with the Swiss stock exchange. Well, maybe you could tell us a bit about that project, a bit like a status. What happened? How is it going? What was the results?
Yeah, well, thank you. Exactly. We had this project. It's actually called Project Helvetia.
Exactly.
So the first stage, the first reports have already been published. You find them on the website of the Bank for International Settlement. So we did it together with the Innovation Hub at the Bank of International Settlement, but importantly, as you said, together with the Swiss Stock Exchange. And we were a little bit pushed into this project because the Swiss Stock Exchange decided to open up a digital exchange. And they also said we would go live actually already last year, but they are waiting for the license from FINMA, but they are supposed to go live this year now. And their intention is to go live with a stable coin. So they have a blockchain. It's a Corda blockchain. I guess not everyone here would say it's a blockchain, but it's a Corda blockchain, and or distributed ledger, maybe the better terminology. The question is, how do you pay? So you have the digital securities that are sold and bought there, and you have to pay somehow, and you have to get somehow money on that distributed ledger, and they do it with a stable coin. So the question for us was exactly for these risk issues, wouldn't we prefer them to settle their payments with central bank money? And that's how we got into this project. So we did 2 proof of concepts, and they are already finished now. So one was, what happens if we issue a CBDC, a whole CBDC on that distributed ledger? So the Swiss National Bank in that project was a node on the distributed ledger, and we issued central bank money directly onto the DLT. And the second proof of concept was we just connected the DLT with our RTGS. So basically the only thing that went back and forth was a message, but then it was in the accounts of the bank was the settlement. So there was no money on the DLT, and we wanted to see which is the better system. So what we found is that issuing central bank money on the DLT works perfectly well. We also looked into the legal issues. And I think the interesting thing of that project, so there were several central banks who did similar projects. I think the interesting thing for us was this is not a research project. It's not some pilot. This is a system that is going to go live, well, that is ready to go live. So all the details are there. How is it booked in the accounts of the bank? So really all the nitty-gritty details are there, which made it much more, we had to think much deeper. We also had to think about all the legal issues, does it really work legally also the way we do it? So a very interesting project. So the first phase is over, and now we are going into the second stage, and one is really a deepening. There are some questions that came up that we have to think harder about, but we also intend to go and collaborate with the central bank abroad and see what happens now if we start to involve other systems, maybe other blockchains and other central banks. So now we are going into the second stage, a very interesting project.
So I mean, will it then go live with you, or will it go live alone? Or how will it go live?
It will go live first without us. So we just showed we can do it, but this would be, it's a policy decision that has not been taken yet. We also said from the beginning, we just see how it works. It's a proof of concept. So they intend to go live in the second quarter with their stablecoin.
Okay.
What is special about their stablecoin is because they are the financial infrastructure provider of Switzerland. They have an account with us at the Swiss National Bank. So their stablecoin is backed with central bank money.
Thank you. But so thinking of that, this would be for you, I mean, in Switzerland, I guess, I mean, this whole question about standards is also, I mean, a question, because you mentioned how will you then connect this project to another project, in another country, right? I guess we need some standards before, the different systems can talk.
I mean, I think that's a very good question. This whole issue of interoperability, I think it's a very important issue. And as you say, I mean, one way to do is to have certain standards and make sure that these different systems, I mean, either you can say everyone needs the same system, that would be one way to do it. Or the other way, I think, which is much more appealing, is that you have this interoperability. And then probably you need, as you say, some standards that those different systems can communicate with each other. They're also in mobile payments, interesting. Like when I come from Switzerland and I have some mobile payment system and I go to Barcelona, a lot of times it doesn't work.
Yeah, exactly.
The same thing here. Why doesn't it work? You should find some way to make these things interoperable, which makes it much better usable.
Yeah, indeed. Thank you. Okay, so my next question is, now talking about blockchain and central bank digital currencies. Do we need blockchain to issue a central bank digital currency?
I think that's a very good question. And I would say for a retail CBDC, no. Actually, the proposal that I was talking about is token-based and is not blockchain-based. And there are a lot of people who would say that doesn't exist. You cannot have a token-based system without blockchain. Well, I hope to convince you once this paper comes out that it actually works. But so in the whole, the problem, of course, is what everyone knows. It's scalability issues that you have. That's one of the things. But I think the much more fundamental issue for me is, or maybe I have to go one step back. There are two ways to do it with a blockchain. But if I want to have what a lot of people talk about, to have something like Bitcoin with CBDC, that you basically distribute the central bank balance sheet on the blockchain, then my answer would be that doesn't make any sense. Then, do you want to have a central bank or you want to have something decentralized? So that makes sense if you want to get rid of your central bank, which might be a goal that you have, or if you don't have a central bank to start with. And the Marshall Islands is a very good example. They don't have a central bank, so why not have their money on the blockchain? Then there is a second way to do it, which might make more sense, is that you issue the CBDC on the blockchain, kind of like Tether, like a stable coin. They are also a central institution. They have a centrally issued stable coin on, like we could issue a CBDC on the Ethereum blockchain or even on the Bitcoin blockchain. I mean, that's one way which could be done. Of course, then you run in all these issues of scalability, of payment finality, and all these issues. So I think if you have something at that scale of an entire nation, retail, in my sense, I think going without a blockchain is the easier way to do it, because like in our proposal, we can easily get to thousands of transactions per second. We have the same throughput like a Visa network, and that's difficult to get on a blockchain.
Thank you. Thank you, Thomas. I think I would like to ask Frankie, because you sent a question a bit earlier to go on stage. Frankie, she's based in Norway, works for Eternic, and she was with us at our conference in January, right? In Barcelona last year.
Yeah, exactly. So I guess I've been looking at the various different architectures since we're based in Norway, obviously looking at the proposal from Riksbanken, the Swedish CBDC project, as well as the UK CBDC project. And one of the things or kind of roles in those architectures that I've seen sort of consistently begin to pop up in various different ones is this idea of the payment interface provider, sort of third party opportunity, I would say, as a fintech, that can potentially sit in parallel with the commercial banks, and but yet that role hasn't been very clearly defined yet, or what the requirements would be. We sort of have heard only that you may have the potential to become a verified CBDC payment interface provider. And so as a fintech, I would kind of like to know a little bit more what the vision is for that role.
So I'm not too familiar with the Riksbank proposal. I mean, I know they are also working with R3 and Corda, like we did in our Helvetia project. Mm-hmm. So I would assume that you will get as a fintech just in the payment sphere the same rights and access as a commercial bank. At least that's how I would do it. And actually, that's also how we do it in Switzerland. We give the fintechs, we do not have open banking. So the fintechs do not have to go through the banks. And I think it's much better to give the fintechs direct access to the central bank balance sheet. So I could imagine that you would do it like that. I mean, when I look at the Corda setup, so it's a permissioned blockchain. So I guess the goal would be to have the fintechs and the commercial banks to be nodes, permission nodes on that blockchain to do then the payments among each other. But the customers would then have to go through the fintechs and go through the commercial banks. And I guess the central bank would be just one of these nodes on the blockchain. That's how I imagine it will be done. But as I said, I haven't followed it so closely now, the latest development with the Riksbank.
Do you have an idea of sort of what level would then the payment interface provider need to operate under obtain a banking license or payments or e-money or
I would assume that some type of a license. I mean, I would think not a full banking license, because also as a payment provider, you are not providing the same services as a bank does. So that's how we did it in Switzerland. We have a called fintech license. It's like a banking license light, which gives you certain rights, but also certain things you cannot do. But we have this fintech license, and I would imagine that something similar will happen here.
Okay. Great, thank you.
Thank you.
I'm going back on mute. Sorry. Thank you very much for the question, Frankie. I was seeing here, Alex. Do you want to ask a question, Alex Nicolau? You sent
yes. Hi. Thank you very much for organizing the event. It's very interesting to hear about the CBDC. I'm currently working on a similar kind in a project called a Global Initiative for Digital Currency as a part of ITU, and we're looking at various aspects as interoperability, security, policy, and so on, because obviously those are important, privacy and stuff like that. I'm currently working on a taxonomy of money project and in the policy working group. I have a couple of questions. Because people assume that the central banks represent public value, I was thinking if and how, Thomas, you see the use of the infrastructure which we're going to be deployed for the CBDC to be used for access not only for the CBDCs to the retail part, but also for other currencies, because we're going to build the infrastructure, it's going to be deployed, but that's going to be deployed only for CBDCs. If there is any way that to be reused for other currencies, because we can't be sure that CBDC is the best for everyone and so on. And anyway, we're building infrastructure with public money that probably should allow for some kind of base there. And the other question was about how you see open banking be delivered on CBDC, because open banking is a requirement in European Union and other places. So, thank you.
Well, thank you. I mean, on the infrastructure, I guess there are different solutions again. So for instance, in Switzerland, we have a public-private partnership with the Swiss Stock Exchange. Well, it's 6, but they also have the Swiss Stock Exchange. But basically, it's a private company that is providing the infrastructure. They are basically just cooperating with us on that. On the CBDC, I guess it depends. You could imagine things like a national blockchain where you have different things on it, like a CBDC, but also like EID. I think this becomes a big topic if you have this digital identity. So that could be one system. And then, as you say, the question becomes, do you allow other private provider to also use that blockchain? But I think there are also other ways. So, I mean, there are already as I said before, I could also imagine the central bank maybe issuing a CBDC on the Ethereum blockchain and using something that is already built there privately. And then there are other issues like the proposal that we made. We do not use a blockchain, so we just use basically the internet. which is also already there as an infrastructure. So I could imagine that there are very, again, I would assume that from country to country, the solution could look very different.
I meant more of, my question is more in relation more of to the payment rail, because CBDC will be present on the payment rails. And if, for example, to specify the question is, if other currencies like Libra or something can use the same payment rail for access, because it doesn't matter how and what currency you do, if that currency is not available for easy access to retailers and people, then it makes no sense. And because we're building that infrastructure and we're telling that CBDC is going to be available on all the payment rails, it brings the question if that should not be allowed for other currencies to be available on the same network for access. Thank you.
That's totally possible, especially if these other providers are regulated. You know, like already now, RTGS, you have the commercial banks on there, you have the central bank on there, and I guess especially if you talk about Libra or the DM, they are working very hard on getting a license, not a banking license, but some sort of a license, a payment provider license. And I guess if you're fully licensed, there is, as you said, there is not a good reason to not allow them to be on the same infrastructure as you allow maybe commercial banks and the central bank. And if you have commercial central bank money on a certain infrastructure, you also would allow commercial banks to be there. And then I think you can open it up to other regulated and licensed payment providers. I don't know whether that's...
Yeah, I mean, that kind of relates to this is very getting there, because there are in UK specifically. I'm in UK. We have these local currencies like a Brixton pound and other local currencies, but they're inaccessible because of they're accepted only in a particular very small domain of things. And if these currencies are complying with standards and technology, they should be able to be accepted and run through the same network, through the same infrastructure, which I'm calling the infrastructure. This is kind of my point. Thank you.
No, I think I agree with you. On the open banking, I mean, that's one way to, as I said, I mean, in Switzerland, we give direct access to the fintechs to our balance sheet. They do not have to go through the banks. I mean, there are pros and cons for both ways to do it. If you think about CBDC, I mean, what I described before, you could consider that some type of an open banking, like with the cash nowadays. You have to go, you get a banknote that's issued by the central bank, but you have to go through your commercial bank to get your cash. So that, there might also be a type of, not digital, but also a type of open banking system.
Because the issue with the idea of open banking is that if I use the commercial bank for my money and transactions, the information about my transactions and spending then stays with the central bank. And then the central bank should provide third-party providers, because this monopoly should be able to provide data out of those transactions to see if they can offer me better services in a particular, like a spending way and so on. This is the idea. That's why it pushes the question if central banks even consider kind of providing that information, this methodology. They should be, because I guess this is the regulation currently, but I don't know your view on this as a central bank.
Yeah, I guess there will be, again, very different solutions, but I think what you say makes absolute sense. Yeah.
Thank you. Thank you, Alex, for your questions. And thank you, Thomas. I have one more question for you, Thomas, related to Bitcoin. But I wanted to do something completely different now. I want to take a picture of all of us, or at least some of us. So the ones who wants to be on the picture, if you want to be in the picture, put your camera on. I would be happy to see your faces. So please, yes, Fritz, yeah, sit up. No, yeah, no. So please, guys, put your camera on. Oh yeah, Virginia, you're there. Yay! How are you? Good to see you. Fantastic. And Luz is there. Oh, fantastic. Good to see you. Fantastic. More faces going on. Cesar, you are there as well. Fantastic. Good to see you. Okay, cool. Yeah, some people outside. Okay, maybe I'll try to do some pictures now. Just 1 second. Smile, people, guys. Oh, wait, 1 second. Wait. Smile. And one more picture because I also need here. Okay, I think I got some pictures. So thank you very much for putting your cameras on. Okay, so Thomas, last question. This is a question on Bitcoin. So as we mentioned in the beginning, a lot has been going on. What is your view? I mean, so do you see Bitcoin as a new asset class? I remember seeing a few weeks back that BlackRock got the green light to invest in Bitcoin futures in 2 of its funds. Can you imagine that Bitcoin in, I don't know, 30, 40 years would even be a means of payment? If, I don't know, like, you know, very far away in the future, that it would be a stable currency? What are your views or thoughts? What can you tell us?
Now, this is now the difficult question.
Yeah.
Well, I mean, Bitcoin has been surprising us again and again, and I think it's really a fascinating. I have been fascinated by Bitcoin because it has. I mean, first of all, if you would have asked economists 12 or 15 years ago, would something like this work? They would have said no. I mean, probably also computer experts would have said no, because how you actually get a public blockchain to do that, you know, you needed to have the proof of work and all this to make it work. But as an economist, you know, what most economists would say, yes, you have like fiat money does not have an intrinsic value. That exists. But usually, or I would say they would have said ever, those things used to have an intrinsic value. There was a time when for your dollar, for your euro, for your Swiss franc, you could get gold that was backing it. And then just after a while, people got so much confidence into that, you know, they keep using it. But I think every economist would have told you, you cannot just start with nothing and it gets value. And that's exactly what happened with Bitcoin. So I think it really went back to some questions of how does money emerge. So I think this is very fascinating. So in terms of investment, I mean, you know, of course, as everyone says, you know, the volatility is extreme that you have in the price of Bitcoin. That's also why we have stable coins emerging to exactly address this problem. So in the sense, if it is a new asset class, it's a very speculative asset class. It's more like gold than money. So, you know, the price can be it's even more volatile than gold. So it's really speculation. But, you know, I mean, it's surprising everyone. A lot of people said 5 years ago, you know, the Bitcoin will disappear. It will be at 0 next year. And that didn't happen. We are now at
48,000 or something dollars. Yeah.
Exactly. So, you know, I'm not betting anything on Bitcoin because it has been surprising me since the beginning. And it's just fascinating to see how that develops. But if you invest in it, you know, you have really, it's speculation and you have to be able to lose that money. So it's really not something that I would recommend to someone who wants to have a safe investment.
Thank you. Well, actually, I think, I mean, for you to be, I mean, an economist and be working for the Swiss National Bank, I mean, it must be like a very fascinating, I guess for all of us, it's a very fascinating time to be living in, right? With the Central Bank Digital Currencies, Bitcoin emerging out of nowhere, right? I mean, what are your thoughts here about like these times?
And I think especially for monetary economists, you know, because Bitcoin and cryptocurrencies really force us to go back to the basics of what is money. You know, most of the textbooks that you had in economics, they didn't even have money in it anymore. I mean, you can look at the good textbook and you don't find money in any of the models. You have interest rates, but you don't have money. And all these thoughts, why do we need money? Why do we need money at all? You know, a lot of economists thought about these issues in the 70s and in the 1980s, but certainly not in the last 30 years. But all these questions are now coming back. And I think that's, as you said, for an economist who is interested in money, this is fascinating.
Indeed, yeah, I agree with you. So Fritz, tak Victoria, you wanna ask a question? One more question, Fritz?
Oh, this was
yeah.
This was sorry because Thomas, you know, how could it get off? I mean, first of all, there were lots of attempts at cryptocurrencies, you know, including direct predecessors that didn't succeed. So you could say we're looking at the huge exception, and it's like the survivor syndrome. So one person survived, or 2 or 3 coming across the river. We're impressed that all of them can swim, right? The other question is, like, I was wondering whether, since it's public, whether the trust in its viability was actually bootstrapped by wash trades and by pump and dumping. So it looked like there was a lot of volume in the beginning, which probably wasn't, but then got people finally to kind of get some, believe that actually other people are already believing it. Yeah. It's like money is this biggest theme of a meme of them all. It's people believe in it because they believe other people believe in it.
Exactly. But how do you get people to believe in the first place?
Exactly. It's what I'm saying. Yeah. So that's the bootstrap phenomenon. So you just generate traffic and it's visible. So gold trades, you can't see a lot if people do, a lot of trading with gold, but since it's public by definition, so people could see, hey, there is all this stuff going on. I mean, probably there is analyses that show that that still there's a lot of trades going on that seem to be just entirely just what would be illegal market making in other sectors, not market making, basically just, pumping, dumping, at least, trading with each other, with one another. And since it's public, it might have just had this effect that it looks like, there's a lot of going on. And so maybe, and it might get people to believe that other people believe in it, even though the other people don't exist, but it looks like it.
And there have also been a lot of questions about the role that Tether plays in keeping up the Bitcoin price. There's a lot of issues here that are interesting to look at.
Thank you, Fritz, and thank you, Moser, Thomas Moser. No, I agree. I'm not an economist, but I think it's very exciting to be living now and to be actually questioning ourselves. So what is money, and what's the best means of money, and to see the next few years. What will happen? Like, will we get, central bank digital currencies issued maybe in 4 years' time, right? As Christine Lagarde was saying, potentially, right? So yeah, thank you so much, Thomas. It was, amazing talk. I really, really enjoyed it, and I think our audience did as well. Again, thank you so much for being part of our community, Thomas, and I look very much forward to see you again at our 5th edition of the European Blockchain Convention. You will be part of a panel, and you will also be doing a keynote, so that's fantastic. And also, yeah, thank you to the audience. It's great to see old faces and to see new faces, because our community is growing every day. Fantastic. I don't know if there is any question before finishing, and if you want to say a few words before finishing, Thomas.
Well, I want to thank you. It was a pleasure as always. I think it's very interesting to talk about this issue, and I'm enjoying it almost as much as you do. I can see that you are enjoying it. I do. Thank you very much for having me.
Thank you. And also, yes, thank you to everyone, because I know it's Friday a bit late, but we thought since we are all in our houses, it would work. So thank you to everyone. And again, thank you, Thomas. Thank you so much for being part. Daniel, do you want to say a few words before we go off?
I just want to repeat, thank you to everyone for joining. And Thomas, keep us posted about your paper.
I'll send you the link, and you will be the first one to post the link once it's out.
Yes. Yeah, because I saw some questions asking for where can we find the paper once it's released. I assume is on the Swiss National Bank website, right?
Correct, yes.
Okay, so we'll be checking. You'll see a lot of traffic on the Swiss National Bank next week.
So the first one to know when it will be published is the Swiss National Bank, and then it's us, the European Blockchain Convention. Fantastic. Okay, guys, so thank you very much. I think you are all. Yeah. Again, Thomas, thank you very much. Have a good evening to everyone, and have a good weekend. Thank you.
Bye, everyone.
Thank you.